So you guys will receive. All right, let's get back on track. We were discussing Ethereum, right? Okay, so we were discussing about Ethereum that I want to be positioned on the long side for Ethereum until we tag 3200. Once that is done with, I think I will start shorting again. At the moment, we are working this resistance zone. Which is why we're rejecting from it. If we do end up coming down here for a pullback at about 2150, that would be a long opportunity in the market. But besides that, I don't want to short it though. Like it's only if we get a decent bit of a pullback, I wouldn't want to long it. If you have followed my strategies where with the insight weekly pattern in play, we had a proper daily SFP information. So this was a short trigger in the market. Specifically, if you go, like let's say on the 4-hour, there's no trigger on the 4-hour. There is no trigger on the hourly chart, but there was a trigger on the daily chart. So that's suggesting that this would have been like a short trigger over here, but the risk reward ratio would have been like very skewed, and which is one of the reasons I did not alert it. Where even if I was to enter short here with a stop right above that high, you will be targeting these downside lows, and the risk reward ratio is 1.8. I don't generally take trades that are like less than 3 for the risk reward ratio. So I did not quite alert this one, but I was just watching it to see how the 3-week candle or the monthly candle is going to close. But the monthly looks good. I think we will expand higher. But that is only if Bitcoin does not violate its low, which is the 100,780 low. At that point, I think it should be good to go. If Bitcoin keeps going higher, that is. My general thesis is that Bitcoin is essentially going to go to 120K. Once it hits 120K, I think you need to start looking for some kind of a reversal in the market to the downside. So if Bitcoin's going to go to 120K, Ethereum should have some favorability to go to 3,200. And from there, we'll see what to do. I would much rather want to short Ethereum at 3,200 than trying to short Bitcoin at 120K. So that somewhat concludes our portion with crypto. Any questions so far with what I've discussed in crypto? I'm personally not overweight on crypto. I already closed my Bitcoin position. I will likely look to open Ethereum longs if we do get a sizable pullback. But I'm personally looking forward to riding the uptrend momentum in indices, which I'm going to cover now on why indices are a much better long position to take than crypto at the moment. So the altcoins which I would be interested in, this one always interests me, SUI that is. It has been a very decent performing alt. So as of right now, it's undergoing a pullback. So if SUI can come down to this area at 2.542, I think this is a very decent position to enter. Now it's kind of in a pickle because it's rejecting from this resistance zone, but if it comes down, it will be testing the support zone. So I would much rather long it at the support zone than hard short it at a resistance zone. So SUI is definitely up top there. I think I've mentioned XLM as something to be positioned for because of like a very long consolidation, which has been going on. The consolidation can keep going. It can keep going for like another 3 months or 6 months, but eventually I think it's going to break out and it's going to go to new all-time highs. I think on Doge, I mentioned this area. So it is setting up the support zone. As long as it's above the support zone, I think this is a decent bit of long position to take. If it goes below this low on 16 cent, I think it's a done deal. Then it's going to go further lower. So this area of support zone is it's a sizable support right here. If you want to enter a long position and target further higher, I don't think I'll touch it FET. It's been undergoing a severe downtrend for some time now. And I think it's dependent on Ethereum. It's not quite working independently. So right now, I think it's building this falling wedge kind of structure. You could put it like that too. I think there's going to be a new low which will get printed. I would much rather be interested in longing it when it comes down here in this consolidation. Yeah, on the monthly chart, if it comes down there, this would be on my list to long. Until then, I don't think it's anywhere to be long right now because if it do go higher, you would much rather short it right there because this is an untapped resistance zone which you want to short. That's an area to short. This is an area to long. In between that, it's non-touchable for me on FET, that is. So maybe if Ethereum goes to 3200, FET goes like 1.14, this would be an area to enter a short position to target these lows on FET. But when it comes down here, that's where you want to open a long position with a stop loss right below at 20 cents. Now, in terms of like the seasonality effect, I do think longer term, yeah, I'll cover MSTR. How about I cover all the stocks when I've just covered the indices because I will be going through Apple stock and Microsoft as well, so I'll add MSTR to it as well, and I'll also cover JPM. So MSTR being like an equity, it's like part of Nasdaq index, so it's very dependent on what Nasdaq does, but it doesn't quite move independently now. So, I short SL at this particular SFE. I think I mentioned specifically, and I received quite a bit of hate for it, that this was going to be a top on Sol, and eventually it's going to run all the way to this low. And then when it came to this low, I called for this low. It's it's a love and hate relationship. It's all for me. At the moment, I don't want to be long on Sol. I think this rejection, which is coming on the monthly candle, I personally don't want to be long until this inside monthly candle low gets taken out, which is at 78. Whatever this thing is, this is a counter trend move also. This is a counter trend bounce. That counter trend bounce could likely target this area at 200. this is where you need to probably look for shorts and look for further downside. Because I somewhat refuse to believe this will be a bottom in the market and the market just goes higher without taking out this low. No, I don't think that's going to happen. I think it will most definitely sort out this inside monthly candle low. It will come down to tag this SL level at 75 between this area. So this area is where I want to go long on Sol. Until then, I think this is just a counter trend bounce. Especially when you look at the quarterly candle. This is a quarterly bearish order block. Why in the hell would I want to long a quarterly bearish order block when it's testing that resistance on this bounce? I think the coming quarter could actually see a downside momentum in Sol. And it's like the way you look at the quarterly structure is that it's printing like a macro swing high on the quarterly chart. It's going to undergo 1 or 2 quarters of downside, and then it's print a macro swing high on the quarterly chart. So when I see the macro swing high being printed on the quarterly chart, that's where I want to go swing long on Sol. Until then, it's just doing sideways price action, doing a counter trend bounce, and it eventually does want to come lower. And if Sol wants to come lower, then every other altcoin will fall lower along with Sol, because Sol is like one of the largest altcoins out there. But I don't want to short it either at the moment. I think it needs to go a bit more sideways from here. Maybe go up to $200, make another stab higher. Once that stab higher does get made, I think you can look for short opportunities, but then eventually I do want to bring it lower. So what you can do is you can take a Fed from this top to this bottom. Take it to 0.618 or at the max 0.5, and that's where you want to short it. Another thing you need to keep an eye on is that this was a macro market structure shift. So when you took out these higher lows and this low was taken out, the market printed in like a major high in the market, and it did a market structure shift to the bear side. So whenever this bounce is happening, it's an attempt to make a lower high in comparison to this all-time high to eventually go down lower and make a lower low in comparison to this low. No, I don't. I'm purely a price action trader, as in like my strategies are based on price action analysis, and it has served me well for the past 6-7 years, and that's how I operate for now. Okay, let's move on to equities. I think we've discussed crypto quite a bit. Let's discuss on what is supposed to happen in the world of equities. We just closed the month of May, and we will be entering the month of June. In the month of May, I think we were already positioned long for the month of May, so we should not be surprised that we saw a very decent bit of a spike in the Nasdaq index. Now, I think it's becoming pretty clear that the immediate liquidity is all-time highs from here. We're not too far away from all-time highs. And most likely we will be hitting all-time highs in the first 2 weeks of June. It's just 4%. For Nasdaq, 4% is nothing. It can do that in a week. Especially like, when the spike happened on NVIDIA's earnings, which I think we called brilliantly on how NVIDIA is supposed to behave. From this particular spike, the market was only 2% away from all-time highs. Now, I can understand that a lot of people were feeling anxious because of the trade war headlines on whatever was happening in the market. I believe in the past live stream, I had mentioned that there is no resistance in the market from this level till here. Okay. Like we were sitting right there, and I mentioned that there is no resistance in the market from this level to there, because the market never actually gave us any pullback whatsoever when it started falling. It's just like down, down, down in a straight line. So if it's going down, down, down in a straight line like this, it can go up, up, up in a straight line too, and just like fill that entire inefficient price action in one go. Now, why did it not do that? Why did the market just went sideways the way it did? Does anybody have an answer for that? Like, can anybody enlighten me, for example, on why the market just went sideways for the past 2 weeks and did not go higher? Like, take a best guess on why it just went sideways. Very good. That's actually brilliant. Fingers. Where the big move was already made in the first week of the month, which was this one. Like, the month of May started here. We had a sideways candle in the month of May. This particular weekly candle, it pretty much carried out the entire move of the month in just one candle. So when you see this kind of price action where 1 week covers 7% of the move, 7% is something which the index does in like 1 month in a very good month. If you were to go back down here, like November 2023, when Yellen was pumping the market, I think Miad would like mention that this was like one of the craziest moves in the index. This return was 12%. So if you were looking at 12% return, it pretty much engulfed 3 months worth of downside price action in one monthly candle. So similarly over here, if you look at the size of this monthly candle, the size of this monthly candle was 11.29%, almost rivaling this monthly candle, which was insanely big. So when you are reaching this top end of the range of the monthly candle, which is supposed to be like 10% or 11%, just give yourself a break and get off the screen for until the monthly candle closes, because the algorithm is not going to want the market to go anywhere until this monthly candle comes to an end, because the range of the entire month just got completed in that particular expansion which happened on the weekly chart. Does that make sense? Okay, good. Now, what the algorithm was doing for the past 2 weeks is making sure that it doesn't sell off and it maintains that trend, which was exploding to the upside, on keeping the returns intact and close the month in a bullish fashion, which it did. Like, how did we close it in a bullish fashion? This down candle, which was responsible for the sell-off, we broke above this high and we closed above it. That was very important, and the market maintained that. Another important thing which happened, which basically happened on Friday, which is one of the reasons I was like looking at the market very closely on Friday, is this level where the market bounced from. Now, this may look like it's some random level, but trust me, it's a very important level. The reason I'm saying it's an important level is because if you go on the quarterly chart, now better yet, not even the quarterly chart, if you go on the 12-month chart, that was the closing of the January 2024 candle and the opening of the January 2025 candle, which means that this is the yearly open. That's where we started the year. And that is where the market was trading going into January 2025. I think right around here. So this is where December 31st happened, right? And this is where we opened January 2nd. So this level is very significant. And if you notice over here, when we were trading in this area, see how the market collapsed down here, but it closed above that SL level. It went on to make a new all-time high. because it found support over there. And when it started dropping, look at this initial drop. How did it bounce? It bounced to the yearly open, and then it rejected it. Full on close to the downside. It created a bearish order block at the yearly open. This was a resistance zone. That was a short. We shorted the yearly open, like if you would have shorted it. And that's where the sell just started expanding to the downside. Now, what we were doing for the last 2 weeks, we were basically basing above the yearly open. This was concerning when it dropped below the yearly open. But then it reclaimed it. And then when it was dropping further lower, you know what it was doing? It was basically neutralizing any of this inefficiency to test the yearly open. And when it tested the yearly open, you had a massive reaction from it. And that reaction was important because you were supposed to close the monthly candle, and we closed the monthly candle above the yearly open, which is an insanely bullish signal for the coming month, which is the month of June. If you would have closed the monthly candle below the yearly open, things would have been very dicey going into June. And this is specifically why I wanted to do this live stream, to show you on how important the close of the month was for us to position for the month of June. Take care, B. Thank you for joining. Hopefully you found value in the stream. Now going into next week, I think the low for the index was likely printed on Friday, which was here. It found support right above the yearly open. Now, as the month of June opens, which is going to be on Monday, we probably get some sideways price action, but I don't want to see price hanging around over here for any time longer. Not only are we opening the new 3-week candle, which is, if you look at the 3-week candle, this was already looking pretty insane. Like, just based on the first push we got, this 3-week candle expanded to its max length, and it didn't have any more upside once it hit this level over here. So we're going to be opening a new 3-week candle. We're going to be opening a new monthly candle, which means there's fresh new expansion to the upside, which the index is going to see. And most likely we start expanding right at the back because we have already been going sideways for the past 2 weeks. Like, there's no reason for the market to just sit there and do nothing for the next week or so. Okay, so if you look at the 5-day chart, people are going to be like, oh, what kind of random time frames is Fennec like popping out every now and then? So when you look at the 5-day chart, see the expansion which is happening on the 5-day candles. Now the next 5-day candle opened at the midway mark of the month, which is 14th of May. What does it do? Doesn't go anywhere. Sideways candle. Tries to go down, makes everybody worried, but doesn't go anywhere. Sideways again. What does it do when it opens on 28th of May? It's still sideways. It's not expanding, just sitting there. But what you need to be concerned about is that this 5-day candle is rolling over into the month of June now. And the next 5-day candle is going to open on 4th of June. So my thinking is that this was accumulation happening on high time frame, and it's going to start expanding to, on the next 5-day candle, to the upside and tag new all-time highs. Another thing which I had mentioned that, initially when I started the stream is that there is no resistance over here. So if it's been going sideways, it pretty much has enough energy to start expanding for the coming week. So you don't need any news headline. Like, any news headline would be good. Like, I think there's supposed to be some kind of a call between Trump and Xi Jinping in the coming week. And guess what Trump is going to do? The call went great. We are on the same page. Trade is going to be good and whatnot. And the market's just going to use it as an excuse to pump it all up again. And people are going to blame it on Trump trying to roll back on tariffs or whatnot. But in reality, the market doesn't care much about the tariffs at the moment, just yet. Don't take my word for it. I'm just saying that just yet, until it makes an all-time high, it's not going to care about the tariff headlines. Those are kind of just baked into the market. What you do need to understand is that once the all-time high gets printed on NASDAQ, I'm closing everything. just everything goes out of the window. Like all the long portfolios which we opened at the bottom right there, specifically speaking, we opened the long portfolio when this SL level got tapped. We opened it right there, and we were still writing it. If you check my channel, I posted returns we have printed on the long portfolio we opened on April 7th. That long portfolio will get closed moment Nasdaq makes all-time high. I don't quite care on what every other stock is doing. Like the only other stock I'm going to care about is like Apple. But what I'm saying is like other stocks like Shopify, iBet, AVGO, QQQ, Amazon, they all will get closed. The only investment I'll keep open is Apple. Now the reason for that is I think threefold. Apple has a recognizable chart pattern, which only gets formed very, very rarely. As in, like, this is rare that Apple would form this pattern. I have seen this thing form maybe 14 times in its entire history. And out of the 14 times when it did form, I think 11 times it broke out bullishly. And it just went up. It does not go down on this pattern. So what I'm trying to say over here, this is an incredibly bullish pattern in Apple, and something which I want to show you guys is there is a very, very strong trigger for Apple to perform in this case. Now, the reason for that is stock buybacks. Are you guys familiar with corporate buybacks, which happen in equities, where the underlying company like basically buys back its own stock? So nobody knows about share buybacks. I need to give a brief intro to that. Very good. Susan knows about it. Very good. Now, what I'm going to show you now is how many times Apple has done stock buybacks for the past decade or so. So I went to Grok and I basically made a research on how many times Apple has done a stock buybacks. Can you see the Grok screen in front of you? I think I shifted from TradingView now. You can see the Grok terminal, right? Okay, good. So I asked Grok to, make a list of all the share buybacks Apple has done in the past 10 years or 20 years. And I came up with the dates, and I came up with the amount authorized for the share buyback as well. Notice that every share buyback has been increasing since 2016. They started with $50 billion share buyback, then raised it to $100 billion, then 75, 50, 90, 90, 90, 100, 110. Now, the thing that you need to pay attention to is the dates. They are important. Pay attention to how every date is during the earnings call, which happens at the month ending April or month starting May, which means that the earnings reported for second quarter when it's about to start. This is why indices have a seasonal effect associated with it, because the largest company in the index, which is Apple, initiates a $100 billion share buyback every year at this particular date. And that leads to Apple outperform in the month of June and July. And it almost always turns out to be bullish in the month of June and July. Okay. Now, Apple by itself has carried out $750 billion worth of share buybacks since 2016. That if Apple is valued at $3 trillion, $700 billion worth of stock, which is owned for that market capitalization, it's Apple itself. Like, that's how much revenue they create as a company that they can authorize these share buybacks, which is kind of insane to think about. That so much money, which is like created by Apple, is spent on like doing share buyback programs in their own company, which is why their stock, when you look at it on a quarterly time frame, it just goes up. Like every quarter, it just keeps going up. Now, not because the company is growing innovatively, like that's part of it. The company actually does good innovation. That that's why they're reporting such good quarters and such good revenue. Like every quarter, they report like 95 to 92 billion dollars worth of revenue which they generate, and they beat earnings every time. So obviously, like they have the money in hand to like do the stock buybacks, but they actually like, unlike every other company, they are the largest out there doing these share buyback programs, which is why their stock just like keeps pumping, 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 pumping like that is. Like they don't quite need the money from like the central bank, like the US Federal Reserve, or like external investors, because they by themselves are like very, very large issuers of debt per se to buy their own stock. And due to that fact, Apple stock doesn't quite falter as much because they have liquidity supply coming from their share buybacks, which they do every year in the month of April or in the month of May. So if you were to map out how the stock has performed in the month of June and July after they do these share buyback programs in the month of May, let's go back to the previous trade war area where Apple was obviously faltering because, when Trump initiated tariffs against China, Apple was the poster child. Like it was going to suffer because of the tariffs, and Apple did suffer. It went down heavily on that, which was from October 2018 to 2019. That was like what the reverse repo market cost as well. So this was the area where it was supposed to, affect Apple when the trade war reignited. So this was the earnings. Specifically, you see this area when the earnings was reported. The earnings did well, but the stock went down. This was also the time when Apple initiated $75 billion worth of stock buyback. It was specifically to do with to backstop any of the backlash they would be getting because of the tariff for which Trump had initiated. Now, the month of May, it went down. What happened in the month of June? Apple just bottomed and went all the way to all-time high. Not all-time high, but like 52-week high, right there, within the 56-day period. Yes, true. That is a inside monthly candle setup as well in Apple. But the double inside 3-week candle is more significant in this case than the inside monthly candle because the monthly candle has like 4 weekly candles in it. The double inside 3-week candle has 6 weekly inside candles in it. So it is a much bigger time frame in comparison. Because you also have the rollover period from like the month of May, which is going to the month of from the month of April going into the month of May. So you have 2 weeks of month of April and 4 weeks of month of May, which are being covered in the double inside 3-week candle. So this was the month of June 2019, where the trade war was supposed to keep Apple down, but because of the share buyback which Apple was doing, it basically they artificially just pumped the stock back up to highs, and it went up by 26% over here. Now, due to that fact, another thing which you need to realize is that, let me show you something. Stock index weightings here. So I think in front of you, you will see the components of the NASDAQ index and how much weightage they hold. See the weight category? Microsoft is on the top, which holds 11% weight, and NVIDIA is on the second. It's at 11.3%. Third is Apple. It's at 10.2%. Now the difference between all three of them is not a lot. Like they all three kind of just hold the same weight by itself on how they do. So when you look at the fourth one, which is Amazon, it's much lower than Apple, and Google is even lower than Apple. So these top three are the main ones, the main constituents, which are responsible for moving the index the way they do. So when I was looking at like let's say the long setup on NASDAQ, right? When we opened the long position on April 7th, I was also looking at Microsoft at the same time because it's the largest constituent in the NASDAQ index. So if you compare it with Microsoft, now the reason the index is like making a V-shaped reversal like this is because Microsoft is performing. It's the main constituent which is causing the index to go higher and taking it to all-time highs. Now Microsoft is about to make an all-time high. It's very close. Now the moment Microsoft makes an all-time high, guess what? Nasdaq's gonna make an all-time high too. They both are correlated. Like it's a given. It's gonna happen. Now why is it gonna happen? Like why exactly would we positioned long on Microsoft based on option calls? Because of inside quarterly candle failure, which was this one. We broke down, took out the inside quarterly candle lows. That's where we entered long, and the earnings basically slashed it higher, and it's targeting new all-time highs now. And due to Microsoft going for all-time highs, Nasdaq is also going for all-time highs because Microsoft is like the alpha in the index. Like think of it like this way: there's a wolf pack, and I just showed you what the wolf pack looks like. This is the wolf pack: Microsoft, Nvidia, Apple, Amazon, Google, Meta, AVGO, which is also we were long on, then Tesla and Netflix. So these top 10 companies, they're like in a wolf pack. The leader of the wolf pack is Microsoft. So if Microsoft is saying that I'm going to go this way, every other cub in the wolf, they will just follow the leader. They will go where the leader is going. And if Microsoft is going to go higher, then every other company is just going to go higher along with Microsoft. And due to that fact, the index is going to go higher too. So that's also one of the reasons why you need to be looking at the constituents of the index to understand why the index is behaving the way it is. Now, another thing which I want to point out is that Apple has been the leader of the wolf pack for the past 2 decades. Microsoft only became the leader like in the past month or so, or maybe 2 months ago, because its earnings outperformed and Apple was like being weighed down because of the tariff or whatnot. But if Apple were to sit at all-time highs, Apple would be more valuable than Microsoft. And in terms of market capitalization, I think Microsoft is valued at like $3.3 trillion. Apple is valued at $3 trillion. So if Apple rallies 20%, it will be the number one company, and it has been the number one company for the past 2 decades. So what I want to show you now is when you look at certain instances where Nasdaq is going for all-time highs, but Apple is not, then it basically means there is an event on the horizon which will be causing Apple to rally very hard, as in like very strongly. And that event is going to happen on June 9th, where Apple is going to be unveiling their new software, and they're like rebranding the entire software system to like go by the year basis. I think they're going to like introduce something along the lines of AI models. I'm not sure what kind of AI models, but they will be doing something around the horizon of AI because they know they've been like lacking behind, and since the past 2 years they haven't done anything to rebrand themselves around the AI, and they see that that's where the headwinds are going. So they already made the indication they're making a shift based on how they're like renaming this software which they're going to be releasing. And the moment that day transpires, I think it will rally at least 10-20% just based on that. And when Apple goes, it will have like an additional effect of bullishness on Nasdaq itself. So which is why you have a technical pattern. You have the fundamental flows in liquidity as well, which will be coming due to the event. And there's a share buyback program which Apple initiated like last month, and that hasn't transpired in the index because, oh sorry, in the stock. Let me just close this thing. All right. Apple had its earnings here, 1st of May. That's where they announced the $100 billion share buyback program. All right. The natural response is it's stimulatory in nature. Stock should have gone up, but instead it went down. It gapped down, and it's been staying down. Now, this makes people believe that the stock buyback is not going to take effect. Now, those people are incredibly, incredibly wrong, because what they don't understand is that the stock buyback actually starts kicking in the month of June. It doesn't quite start kicking in immediately when they announce it. The actual buyback which they're going to do, it actually starts in June. And that's also one of the reasons that NASDAQ has a historically bullish seasonal effect to it. So if you go here, see TradingView offers seasonal charts right there in the tab. So if you look at the seasonal tab, see as you enter the month of June, this line just goes higher from June to July. It's because of Apple outperforming every other stock, and it just like single-handedly carries the entire index along with that. So if you click on more seasonal, it's gonna like open the entire seasonality for you. You can like go back in time frame and include every chart which you want for seasonals. I would much rather prefer to see what happened after 2020, because we did the so Ashley's asking, the leading indicator would be MSFT and Apple. Yes, you have to be watching MSFT and Apple all the time if you're trading indices. I think if there's a setup which is being presented in MSFT and Apple, then that setup translates into what the Nasdaq index is going to do too, because those two names, they are the highest composition in the index, and they single-handedly just carry the index along with that. And that's also one of the reasons how I get the moves sort of right on Nasdaq, because I know what Microsoft is going to do, what Apple's going to do, based on whatever is happening with the fundamentals of the company. Or like, if they have like a key event coming up, like earnings, or like some kind of a event-driven event launch which is happening. So if the company's going to do well based on the event, it's going to have a positive impact on the index itself. But anyways, I was going to like show you the seasonality effect of what we are seeing in the market. So this is the seasonality chart starting from January all the way till December. What you need to be looking at this line over here in different colors. So 2024, 2021, 2020, 2023. And this is 2025, which we are here right now. We're setting a baseline right now, like as in like, we just opened the year. What you need to look at is this particular time frame right here in April. So if you zoom in on the April thing, I don't know if I can zoom in or not, but all 4 years they start going higher post-April, like from April end till when June is about to start. If you look at the purple line, it just goes higher from the April low to June, like the starting of June. And then 2020 did the same thing. 2021, not really. 2024, which is like last year, did the same thing. 2025, surprisingly speaking, we just had the trade war, we had the collapse. We bottomed in April. Like if you look at the bottom, which was printed, like what time was it printed? It was right here. Yeah, April was the bottom. And from April to like the beginning of June, we just went higher, which is what was like being captured. And where does it go? This uptrend was being captured in the seasonality chart. Like, the seasonality dictates that the month of May and the month of April, they're bullish for indices. Now, what's important is like, what have the previous years done in the month of June, when the month of June starts? Now, this is where seasonality is a very, very decent tool to use, because it shows you on how the leading constituents of the index perform when this month kind of starts. Notice how when the month of June starts, they just start going higher. How higher do they go? They keep going higher to the month of July, which is the midpoint of the month of July. After July, they all take a hit. As in, like, 2024 took a hit. We peaked out on July 8th. We took a hit. And then 2023, we peaked out on 16th of July. Then we took a hit. Outside of that, 2022 bear market surprisingly was also going up from the bottom of June going into July, but it actually went up to like August 13th and then it took a hit. 2021 did not do anything, it was just flat. 2020, it kept going higher even throughout this tendency, but it took a hit in September. So bottom line being that you have supportive flows which go into the market starting from June all the way till mid-July. Why does that happen? Like, why is the index always supported? It's because of this motherfucker, which is Apple. Like, it always just goes up in the month of June and July. Even in this bear market, which is happening in 2022, this bottom which is printed in the market, it was printed in the month of June. And from the month of June, Apple went up 32%. Going into the month of July, that was in the peak of the bear market for 2022, as we remember. So it was going down, yes, but it found the bottom in the month of June and then it went up because Apple initiated a stock buyback program, which started kicking in when they announced it in the month of April end and starting of May. So they announced that if you look here, see that $90 billion worth of share buyback, just sitting right there in 2022. That was the reason why Apple performed well in that case. If you go back to 2021, so April 2021, earnings came out. The share buyback program was announced. It actually went down on the month of May, which is exactly what we're doing right now. And the moment June starts, the share buyback program kicks in and it just starts going higher. Goes up until the month of July. It is up 21%, makes a new all-time high. Okay, going back to 2020, I mean, this was like incredibly supportive anyways. The moment we start the month of June, it just keeps going higher till the midpoint of July, which is up 26%. So see the average returns, like from starting of the June till mid-month of July, it's 26% return almost always given. That's also in the bear market, which happened in 2022. Now let's go to 2019 actually. Like that's where the trade war was happening, right? And Apple was like incredibly being affected. And we actually went down in the month of May. The earnings was reported, stock came down for the month of May. June started. How much return? 26% again. I mean, this thing, when I saw this, I was like, holy fuck. How exactly is that nobody caught onto it? That every year Apple goes out on the earnings call for the quarter ending the month of April or like the month of May, they announce a share buyback program, and that share buyback program starts kicking in the month of June, and the stock goes up 25%. And it happens every year from 2019, 2020, 2021, 2022, 2023, 2024, and now 2025 did the same thing. So this time around, I'm like, I'm gonna capitalize on this thing. I'm not gonna just sit around and try to get sucked in with the trading headlines or whatnot. And that this is one of the reasons my capital allocation, if you look at it in the live stream in my channel, the long portfolio I posted, I am heavily positioned long on Apple because of this particular aspect that going into June and July, you are going to have those headwinds, which will pump Apple to new highs or something. Now, how much return is Apple going to give at 26%? It's exactly at all-time highs. Like if you take it to all-time highs, it's sitting at 29.77% return. So if Apple goes to all-time highs, then guess what happens to NASDAQ? Apple is the 10% holder in the index, and if Apple goes up 30%, NASDAQ goes up like at least 7 to 8% just because of Apple. Now you see how this research ties into your trading, like how you can be biased to like a certain degree in the indices going into the month of June. Like there will be so many headlines coming with the trade wars and whatever is happening with geopolitics or whatnot. But if we just know that this one constituent is supposed to go higher because of inherently which the company is doing to like inflate the stock price, just benefit from that. Like why bother with what's happening with the broader trade war headlines? Is that clear so far from what I discussed? Actually, I'm already positioned long. So if we do get the inside bar fail, I will add on to my long position even more. I'm not gonna wait around. Like I'm not waiting around for it to give me like a trigger per se because I entered the long position right there, like at the pretty much the bottom. In this case for Apple, because when I was opening the long portfolio, Apple was literally trading on the hourly time frame around here on April 8th, which is when I opened the long portfolio. So that position hasn't gone anywhere just yet because options kind of work. Yeah. So let's say if you want to wait for a trigger, that's fine. You can wait for a sweep to the downside if it gives you a daily SFP. That's a significant long trigger to enter the market. I was looking at the past 3 week candle, inside 3 week candle patterns which have formed. Like say for example, this one over here. This was the only inside 3 week candle failure I've traded on Apple in the past. So it came down, took out the lows, reclaimed it, took out the lows again, massive push higher, eventually goes to all-time high. So that's an example of how the lows were taken out and then eventually the highs were taken out on Apple again. Okay. Then the previous one, which actually took my attention as well, was this one, where the inside 3 week candle actually broke down, took out the lows, eventually then did a reversal, went up and took out the highs, and then it just kept going up after that. And then going further back, I don't quite see any inside 3 week candles over here. This one is there, but it did not actually break down. This is just like a single inside 3 week candle. I'm trying to think for double inside 3 week candle. There is no double inside 3 week candle here as well. This is just an inside 3 week candle, inside 3 week candle, another inside 3 week candle. Yeah, this one over here. There. This one specifically was a double inside 3 week candle. Now in this case, this was forming exactly at the top. And that ended up breaking to the downside. It gave you a short trigger. And once it did break down, it just stayed down for a while to come until the stock actually bottomed and you reversed higher again. That goes to show on how powerful those triggers are when they get triggered in a certain direction. This was the one I came across, which was perfect, like near perfect. It's actually the same one we're printing right now. This was back in 2014. Okay. This was the double inside 3 week candle, which got printed like that, which is something which we have right now in our case. The next 3 week candle, it went lower first, took out the low. That's an SFP. If you look at the weekly candle, that's a proper weekly SFP. Should have been long on that. What happens the next week after? Just one weekly candle all the way back to all-time highs. I don't even know what happened over here. There's no earnings. Maybe it is. I don't know. Let's see. Yeah, most definitely earnings. It doesn't show, but it says D, right? So there should be some kind of earnings right there. And earnings came out, it just like squeezed higher from there. And it didn't come back. That's how you know that this inside 3 week candle failure just like broke out. Yeah, back in 2014, play it out like that. Outside of that, inside 3 week candle, which were double inside 3 week candle. I don't see any here. Don't see any here. Nope, don't see any here. That's an inside 3 week candle, but not a double one. This is a double one. There you go. So I see how the next 3 week candle went up. But what's more important is that when the trend started unfolding, it just went like a freight train. It did not stop. It just kept going for like 2-3 months in a row. All right. And even beyond that, there was another one right there, like a little tiny one. Double inside 3-week candle. And the next one broke out again. So for 9 weeks, the trend was up from there. How much was the return in this case? 45% return after broke out. Outside of that, there was this one, which was forming at the bottom. Now this one was back in 2002. That's when the tech bubble burst had just transpired, and Apple was like trying to find a bottom after like a massive drawdown. It took a very long time to find a bottom, but the bottoming process was kicked off by this double inside 3-week candle, and it just went sideways for like 6 months before it found a bottom and it went higher. Now we're not in a tech bubble burst, so this pattern is not going to transpire in our current case like this. Anything beyond 2000, the company was very premature, so you wouldn't quite see the same execution in the market. Anything beyond that, but when it became part of the S&P 500 index, and it had index flows associated with it, that's where it matters, because it's part of the index now. So anytime you see these patterns getting printed, that's indicative that it's going to cause a very giant move in the market, and it's not going to just sit there. Is this helpful? Okay, good. Let's look at MSTR. I think you mentioned that MSTR needs to be looked at. You're welcome, Kingers. I think just because of Apple, I'm extremely confident that the June month is going to be extremely good, at least for indices, because there's going to be decent amount of inflow coming into the indices because of that particular company. And if it triggers long, then all hell's going to break loose when the company does trigger long. So MSTR, I think you already see this now, momentum, right? That this is the pattern in play. You did see this, right? Or are you just learning about it now? Yeah, I would say so. But what actually I'm more inclined for MSTR is the 2-month candle, because we are breaking out of this double inside 2-month candle, which is a much higher time frame than 3-week candle. And by itself, I would say that it's going to make a new all-time high on MSTR due to the inside 2-month candle, double inside 2-month candle. Like, this is a consolidation which is breaking out. This is not a chart which is going to like top out over here. Now, what's interesting over here is that there was an inside weekly candle, but it did not take out the highs, and it just went for the lows, and it's trying to find a bottom. The moment it takes out the previous week's high at 381, I think that's a long trigger, and it wants to go higher. Take out the inside weekly candle highs over here. And from there, it's going to tag the all-time high. So think of it this way. There is no resistance between 440 and 543. It's just thin air because it's just a giant wick. And it's spending decent amount of time just going sideways, trying to find some kind of a local bottom, and it should be going higher from here. 2-week fail. Yes, very good. Yeah, I don't see the 2 weeks. So that's a very, very good trigger in the market. Good catch. So the inside 2-week candle failure, which is being printed, you could possibly take out this particular low. And when it comes down, it can tag this SR level at 343, which would also mean that this inside 3-week candle's low gets taken out. And if it tags this SR level at 343, then I think you can take a long position over there because your stop loss is incredibly close, where you enter the long position there, your stop goes below this particular level, this low here, thrust candle, and then you take it higher to new all-time highs from there. That's a 5.69 risk-reward ratio on MSTR. Very good. Yeah, MSTR should perform. Another thing which you need to look at is JPM, where it has an inside weekly candle right now. And this inside weekly candle low does not quite have a wick to it. So I do know for a fact that it's going to take out this inside weekly candle's low. Okay. Now this SR level, which I've mapped at 254, that's a very strong SR level. If it comes down here, which I think it should probably, I don't know actually if it's going to come down there. There's an open gap sitting here, so it hasn't quite filled the open gap. But I do know that this is an inside weekly candle, so if it takes out this inside weekly candle's low, you need to be hunting for some kind of a long position on this chart. And JPM has a very nice looking monthly candle close, which just formed. What you need to understand with JPM, just like how we discussed that Microsoft is the alpha for NASDAQ index, JPM is the alpha for S&P 500 index. So S&P 500 and JPM, they go hand in hand, they go together. And if you look at SPX, see how the monthly candle formation is pretty much similar in both of them? Like this down candle in JPM was this down candle in SPX. This giant wick is this giant wick. This up candle is this up candle. So if I'm on the bandwagon that S&P 500 is going to make a new all-time high in the coming month of June, then I'm also on the bandwagon that is going to make an all-time high on JPM as well. And the option calls on JPM are going to pay handsomely for a 280 strike for like 2 months out. I think they can give you like 150 to 200% return easily if you play it right. So that can most definitely pay out as well for JPM. Like let's say if I'm long on S&P 500 using options, I'm technically long on JPM using options because it gives better bang for the buck. And if you're ever going to be calling for like a top on S&P 500 index, then you need to be calling for a top on JPM as well. Like the index is not going to go down without JPM going down. So if you have like let's say a bullish setup in the stock, like when I was calling for the bottom on S&P 500, it was due to the fact that JPM was forming this inside 2-week candle failure. Now that inside 2-week candle failure was not actually being reflected in S&P 500 because the trigger was not there, but the trigger was there on JPM. You see how the close happened over here? That was a proper SFP formation, but that SFP was not actually present in the index, S&P 500 itself. But because I knew that JPM was going to start going higher, just see how conveniently JPM went higher and tapped the target, and S&P 500 is like setting close to target as well, very close. That's a prime example on how following the leader of the constituent index, the constituents of the index, like leads to the movement index as well. So keeping note of the main constituents like JP for S&P 500 and Microsoft and Apple for Nasdaq. Microsoft, Apple, and Nvidia actually. Those three are important for Nasdaq index. Bitcoin is actually pumping, going into the weekly close. So that's like solidifying that this is a key weekly low, as in it's something which people are going to be putting the stop losses below on. So if it does come down and it runs this low, maybe even goes for this low, and it makes an SFP, that would be a long position to take on Bitcoin. Okay, for once, the indices haven't gapped up. Thank God. I was actually praying for that. Like, please don't gap up. Because if you do gap up, that would have caused this monthly candle to have like a gap on it. I don't want that. If you want the expansion in the month of June to happen, you do not want to see some kind of gap on the open itself for the monthly candle and also on the 3-week candle. It's quite fine if it's going down. I just don't want it to go up in the beginning part. Now, what you need to be also paying attention to is this particular low in the market for Nasdaq. That's actually a flat open. And I know for a fact that at some point in the future, Nasdaq's going to top out after taking all-time highs, and it's going to like come down very sharply, and it's going to attack this flat open. I don't think it's going to do it in the month of June, but most likely when Apple's done pushing and it prints like a top going into the month of July, then you will most likely be looking at Nasdaq taking a shit along with Apple and coming down. So this also keeps you online with the timing aspect with when you could be anticipating like some kind of a top to be printed on the index. So just use the season chart for that. I think that's pretty awesome on reflecting on how the index behaves going into like a certain month if like everything is fine with the economy. Like just look at the previous 3 years on how it's done in the month of June, and most likely it's going to perform the similar way. Especially like when you compare the return on this year comparative to the other years, you have started the month of June with like 8% return, 9% return, 12% return on the index, but the year 2025 is sitting like just 1% return, which means that there's another 10% upside to capture to get in line with like how the index has performed in other years at this particular time frame of the year, which makes it very, very easy to anticipate that you're most likely going to be making an all-time high and making a 4% return minimum. But beyond that, it could go up another 10% from here to catch up at like the seasonality effect. And that's like another 10% return from this point onward. But I'm not going to hold my long positions to like just capture this 10% return. I'm going to close everything when it makes an all-time high. And I'll look for some kind of short opportunity going into July just to get in line with the seasonality effect as well. Is that clear so far on what the indices is supposed to do? Hopefully no more questions. We can move on to Forex currencies from now, if there are no questions for indices or even equities. Take care, Momentum. Thank you for joining. So we'll wrap up the stream with Forex currencies, as there is a very, very easy setup information for Dixie. That is the inside monthly candle. Now this is like a bread and butter setup for me, where I will be waiting for the lows of the inside monthly candle to be rated, take out the lows, give me an SFP on the daily chart. If it prints a daily SFP, that's a long trigger to enter longs on Dixie. And if I will be looking for long positions when the lows are taken out, that technically means I would be hunting for short on Euro when it takes out the high over here. So same pattern is present on Euro as well, which is this inside monthly candle. And if Euro and Dixie look like this, then every other Forex currency, or like even gold for that matter, they have the same pattern, which is this inside monthly candle. So regardless of whatever biases you may have with the currencies on what they're doing in the daily chart, on the weekly chart, you need to throw those biases out of the window and just focus on this liquidity pool which I mapped out. These liquidity pools are the only thing that matter for these currencies going into the month of June. If we go higher and we take out the highs on gold, look for an SFP trigger on the daily chart and the weekly chart. If it gives you a weekly SFP or a daily SFP, that's a short trigger if it attacks the highs. If it goes for the lows, as in if it goes to 29,056, or if it goes to 3120, and it makes an SFP with the lows, that will be long trigger. I personally think that gold will be coming down here to 3022. When it comes to 3022, I will be taking a blind long position on it. Where this area, I am quite familiar on gold, between 3022 and 2974, that this is a support zone in the market. It's a very solid support zone which is printed. And I think gold is like slowly just making its way to come down to there like a grandpa. Because it kind of like went on a very vertical run up, and it's trying to undergo some kind of a decent bit of a correction on higher time frames. Especially when you look at the 2-week chart and look at the RSI, it's been sitting overbought at the max on the 2-week chart and also on the 3-week chart. So this 3-week chart or 2-week chart RSI, they all need to relax just a bit. And I think that relaxation is likely going to happen when it comes back down and tags the 3000 support zone. Now that also aligns well with our thesis that indices should go higher for the month of June, because gold and indices have like an inverse correlation with them. Now the reason for that is pretty straightforward. Gold is acting like a risk-off asset class, that anytime any news headline has come up with the geopolitics stuff, gold goes up, because the Chinese, they just buy gold anytime something happens with the trade war. And if any good news comes out on the trade front, gold goes down. That the money gold is receiving when people are getting scared, it just flows out of gold and it goes into the indices. So if gold goes down and it goes down to like 3050 or 3020, that also means that the indices are going to go higher as a result of that. Okay, but the thing is that if it is going to go down and it's going to tag this particular low, then you need to be looking for long triggers on gold in that case because of this inside monthly candle pattern. So that also boils down to my thinking that if indices are going to go higher for the month of June, you want to start degrossing out of that position once it makes all-time highs and look for shorts going into the month of July for indices. Okay, so the indices and gold kind of go inversely with each other, and this pattern is like very good of a indication on how you should be positioning in both of them. I'm personally not going to short gold though, like even though there is a pattern in play, which is this inside weekly candle. I guess you could play it if it gives you a proper trigger. I would much rather wait for it to come down into this area, and I would want to long it over there between 3020 and 3050. I generally don't think it's gonna go below there. Like it's not gonna go below this swing low because we are sitting at inside a weekly support zone, which is this weekly bullish order block. And going below there is likely not on the cards. But let's entertain the scenario. If it actually does go below 2150, then this will be the end of this entire massive bull trend, starting from like this bottom all the way to this top. Just going below that low will like actually do it. But I'm not going to be the guy who will be like, okay, this low is going to get taken out and the entire bull run is going to come to an end. No, the market will have to show me that it's doing it, and then I will make the conclusion, okay, that this entire mega trend is like kind of faltering right here. But until like it's staying above this bullish order block and it's trading within the support zone, the risk reward ratio would be very, very good to enter a long position at 3050 with a stop below 2950 and you're targeting 3500. That's a 4.4 risk reward ratio on a swing position, and I'll gladly take it when it gets there. Okay, so that's for gold on what I'm trying to do. And whatever I discussed with Bitcoin, like, on a trending basis on how you have to use a 3-week candle time frame when you're trying to decide if a trend is faltering. When gold started bottoming and it started printing the bottom on this 3-week candle, notice on how none of the 3-week candle lows were violated on this push. But this 3-week candle low got violated last 3 week, like in the last week or so, in the month of May. It took out this 3-week candle low, which is suggesting that the market is gonna go like a pullback, like a macro pullback. Where taking out this low is suggesting that gold is going to continue to go lower for now, and it's going to attack this 3-week candle low again until it forms a bottom again, like this in this case, goes sideways a bit, and then starts running back up again. So based on the inside monthly candle, I would be actually looking for further downside in gold, take out the lows of the inside monthly candle, look for a bullish trigger in the form of a daily S&P or weekly S&P, and we should be taking it higher from there. Until then, I think indices are the best place to be at in terms of positioning. But these are something to keep an eye on going into the month of June on how the price unfolds to the downside. But let's say it doesn't unfold to the downside for some reason, gold just spikes up and takes out the highs. I will be looking for shorts in that case, like shorts in a way that if it gives an SFP on the daily chart, that will be short trigger, and I will gladly take that short position. But I'm not entering a position right here in the middle of nowhere. 3,300 is a middle of nowhere. It needs to come to like 3,000 for a long. I'll go to 3,500 for a short. Don't do anything over here at 3,300. So that's for gold. Euro, actually, let's cover AUDUSD because we entered a short position last week as it pretty much triggered short at the exact level where I think it was going to do it. It was based on the monthly candle where I decided the level, where this was the level I mentioned, that if it were to spike higher, it would tag this level, and that would be the level to enter a short. The pattern in play was the inside 2-week candle. Let's mark this in red. Okay. So we had a pattern in play already going into that month. Let's rewind it and play it on a day by day basis. Going into that particular week, I had mentioned when I was looking at the pattern, which was the inside 2-week candle, and looking at this SR level on the monthly chart, I noticed that this particular daily candle, you see that little spike which had happened? It had run up this liquidity pool. So the stop run had already been done. And because I saw the stop run, I was more than comfortable keeping my stop loss right about there and enter short at the tag of this SR level. That's basically where I had like just put my limit order, like limit short. And this is the trade setup I discussed in the previous live stream. where it would be amazing if this level gets tapped, you enter short, stop loss would go right above the swing high, which is right there. And that's an easy 13 to 14 risk reward ratio for the short side, where your target is going to be the downside liquidity on the inside 2-week candle. Because my thinking was that the next 2-week candle, which we're going to open, you're going to see an upside spike, you're going to tag this SL level, and you're going to see a rejection, which will then translate into an SFP and trigger the entire pattern to go short. So we're actually entering short before the entire pattern even got triggered. That's called aggressive short entry in the pattern itself. And the risk reward ratio was much more effective entering right there on top, unless you wanted to like wait for confirmation, like in some kind of a short trigger to enter the market, which would be this. And in this case, if you were entering on the short trigger based on this daily SFP, you would be entering down here with a stop loss which would be like extremely wide, and your risk reward ratio drastically drops. It goes down to like 2.17, which is one of the reasons I love entering on breakouts out of the inside weekly candle, inside 2-week candle, in anticipation that it's going to hit an SL level and it's going to reject it, and it will form like an SFP, and that SFP would be the future trigger. So you're actually entering before the SFP even forms, and that's how you get like insanely high risk reward ratios. If you have the entire premise right, like you have the right SL level, you have the right risk management rules in place, and you don't get shaken out of your trade, and you got the trigger. What happened after that? Just goes down. Now the trigger would have worked. Like if you wanted to enter right there on the daily SFP, that would have been fine too. But you would have missed this entire move, first of all. And it's just been going down ever since that it tagged at SL level. That's how you know the SL level is good, and you don't have to doubt if the market's going to go your way or not. Now all you need to do is patiently wait for this 2-week candle to close, because this pattern is only good if this closes as a failure. It is looking like a failure right now, but it's not confirmed yet. It still has 4 days, 23 hours, 5 more trading days to go until it confirms as a failure. And the moment it confirms as a failure, it will start expanding to the downside for the next 2-week candle, which opens on 9th of June. And it goes down from there. Okay? So the trade is active. Like, we are in the trade. You just need to give it time to play out now. It's like a swing trade. It's not something which is going to like just happen in a few days. The weekly candle is nice. It's printing a failure already. So what you can do is you can move your stop loss right about this swing high and keep riding the trade down lower. So this will be the target, 63,567. So that's for AUDUSD. Let's look at USD CAD. I think Mohammad Reza wanted me to look at it, where he was mentioning this particular pattern. Now I think both me and Miad, we entered short on USD CAD at the same time when this high was getting taken out. That's where I mentioned to him that you're attacking multi-year highs on USD CAD. There's no way you miss it. And when these highs were getting taken out, we were on top of getting short on the market. And if you caught that short along with me, I think you did very well. I wasn't personally updating on this one because I think I wanted him to take the charge on this one, as he had fundamental research with the positioning suggesting that there will be like a massive unwind happening. But the technical structure which I discussed with him, it gave him even more confidence to execute on that existing pattern of inside, not inside, just the quarterly SFP information which will happen. And once the quarterly SFP formation got confirmed, you have a short trigger, and the next quarter is expanding to the downside. Now, I think Mohammad Reza's question was that if this thing is expanding to the downside, does that mean it will target this downside liquidity? The answer is yes, it will, but you need to close this quarterly candle below 1.38992. As long as it keep closing this quarterly candle or like the monthly candle below this high, this technically acts as a failure. And this liquidity will become hot in the coming months too, in the coming months or quarters. So yeah, like these lows will get taken out eventually for USD CAD. There is no inside monthly candle on USD CAD, so there's nothing much to do in this case. Another chart I'll discuss before I call out the stream is USDJPY. It has a very, very good pattern, and I think this is one of the higher strike rate patterns to play in the market whenever USDJPY prints it, which is this inside monthly candle. Now, outside of this inside monthly candle, what you also need to be looking for is the quarterly chart. And mark out this quarterly candle's high. That's a very, very important SL level. I think I've discussed this thing in the past as well. Now, this quarterly candle has 28 days to close, so anything is possible at the moment, where because we have an inside monthly candle, this monthly candle can take a very wild swing. It can go all the way up, it can tag this SL level, and it can reject it then. And once you see like a rejection happen, like a failure, like an inside monthly candle failure, the month after that, you will see expansion happen to the downside. So my thinking is that you need to be nimble with USDJPY. You need to give it time and wait for this upside liquidity or downside liquidity to be taken out. I would much rather prefer that the upside liquidity gets taken out and the market goes and tags this giant weekly resistance zone. Actually, not that giant. You can just like use the body in this case, which also lines up with this quarterly SL level. If the market actually rallies and goes till here, which is a massive rally, by the way, I don't think it's going to do it in a month or so. But let's just say, like theoretically speaking, if this liquidity gets taken out, then you are looking for short triggers up there when it gets there, and look for the market to basically reject it and come back down and take out these lows. But until then, I'm not touching it. I will wait till either the upside liquidity or the downside liquidity gets taken out before I act on any of the, like either side of the market. I'm not going to act on it until like either side of the liquidity gets taken out. Okay, so that's for USDJPY. Any questions which you guys like to discuss? Like this is the time for you to ask me anything which is unclear with the stream before we call it for the evening. I think we discussed a lot. I threw a lot of information out there. It will take time to stick. If there is going to be any kind of confusion or if you need clarification, feel free to discuss the setups in any of the channels. Like, you know, Inside Bar Forum is great. Like I always respond to any of your charts which you would post in Inside Bar Forum. Or you can just like post it in Trader Chat and tag me. DMs are fine too. Or even in the discussion floor, if you want to post your charts and discuss anything which we have discussed in the live stream, that's fine too. You're welcome, guys. I'm glad you found value in it. So we will meet again next week, and hopefully you have a wonderful starting of the June month. I will post the recording shortly after I am done processing it. Cheers, guys. Take care.